Hello and good morning. Welcome to the morning update here from Phoenix Blue. My name's Mark Owen and it's Monday the 14th of March. Our focus today is going to be on central banks and gold. Last week we had some news announcements coming out from Canada, the ECB and New Zealand. Now the major focus was on Mario Draghi speaking, where he increased stimulus by a further 20 billion euros per month, also cutting interest rates into further negative territory. Then we also had the RBNZ. They actually cut interest rates a further 25 basis points. So what we can see is that those two markets, or economies I should say, are looking at a weaker euro or a weaker Kiwi dollar. Now, what does that sort of present to us and what opportunities? Well, ideally what we want to do is if they're wanting a weaker euro or a weaker Kiwi dollar, then we should be fundamentally looking at selling these particular markets. And which markets do we want to sell it against? Well, we either want to be trading a monetary policy in terms of fundamentals. By that we want to look at somebody that is either neutral or bullish their particular market. So for example, the Bank of England or the Fed, they're at least neutral. Potentially we're going to see interest rate hikes from the Fed. However, the talk was a lot more bullish at the beginning of the year than it is right now. Is there going to be a rate hike in June? Is there going to be one this year? We were at the beginning of the year thinking multiple rate hikes. That may still happen, but we have to wait and see. So this week we've got the Fed speaking, we've got Bank of Japan tomorrow, we've got the Swiss National Bank, and we've got the Bank of England, all going to be talking about interest rates. Will they raise them? Will they weaken them? Reduce them, sorry, or are they going to keep them neutral? So during this kind of week, what we have to do is we have to think about risk management. Now, because anything that is unexpected to the market, i.e. should there be a rate hike or should there be a reduction that we aren't anticipating or that isn't priced in, you will see a major correction in the market. Now, should that happen and you're not risk sizing correctly, you could have a huge loss on your account. And that's something at Phoenix Blue we don't ever like to see, okay? I'd rather see nice, steady, consistent gains than huge gains one month and a huge loss the next, okay? That's not trading. We want to see nice, consistent gains. Obviously, we're going to take losses, as you see, because we call our trades prior to them actually happening. So be very careful this week. And on the back of all this, I think lies uncertainty in the market. So the uncertainty and also having to hold cash costing money now. So what we're seeing is we're seeing surges in the commodity market, and by that we're talking about gold and silver, traditionally known as safe havens, but right now in uncertainty, it's a, let's say, solid place to be putting your capital. Okay, we've got uncertainty in the stock markets as well, but let's see. Let's take a look and have a look what happened overnight in the Asian sessions. Okay, so we're having a look here, and we can see that we've had a big bullish gap up, and now we've got a little bit of a bullish bar. The question is, are we going to see this market close the gap? Are we going to see it continue to the upside? We have potentially shift in momentum here, in the sense that the market created a high, it's pulled back to the 2015 lows, and it's created a higher low, and now we've gapped up above the previous high. So any sort of pullbacks here on the Nikkei, we could probably look at potentially trading this market long, which would coincide with any sort of stimulus or easing by the Bank of Japan, which is anticipated. When they'll do it, who knows, and to the extent of what they'll do it, who knows. So until we know that fact, just trade what we see. Okay, the next market we're going to look at is the Shanghai Composite. Again, this market had a gap up last night, and it's trading on the 2015 lows. Okay, so that's this red horizontal line here. So we can see that the market gapped up, and then it's having a little bit of a sell-off. Currently, the question is, will it close that gap? I think until we see any sort of break above these highs or below these lows, we're in a little bit of no man's land with this market. Now, the Chinese yuan, okay, we can see we've had a sell-off in the dollar. Okay, the dollar yuan has come back down towards 2015 highs. and would expect to see this market probably test this level again before making some sort of correction. Now, this is our outlook on the dollar index. So between 97.50 and 95.50 we are neutral. Neutral means we're not particularly buying, we're not particularly selling. However, what we will look at on the dollar index is, should the market test 95.50 or 97.50, there could be a trading opportunity on the majors and minors. So we're going to sit out of this particular market until we see a test of one of these and it correlates with our charts that we're looking at, i.e. Something like the euro from 1.14 or the euro at 109.60. We could potentially look at buying or selling that particular market because it will correlate with the dollar index around 97.50 and 95.50. Okay, the RBNZ, they cut their interest rates last week. Now, what impact did that have on Kiwi dollar? Well, the Kiwi dollar, as you'll see, it's been trading between sort of 68 and 6200. Okay, the red little rectangle we have here, this is what we call our supply area. This is where we're ideally looking to get short. Should the market get there, I'm not sure it will unless the Fed do something unexpected and we see a huge sell-off in dollar and we see the market rally above 6,800, and then obviously we can use the 6,800 as a demand zone. However, I would anticipate from what we saw last week with the RBNZ, they've called that they want a weaker Kiwi, so our view is we're looking to get short this market. So any sort of daily close or weekly close below this short-term trend line here, and then we'll look to pretty much from the area we're at now, around the 6,700, we'll be looking to get short. So I want to see the direction generated, i.e. a break and close below this trend line. Then we'll look for a pullback into around 6,700, and we'll look to get short and run this down to extended targets of 63s, 6200s. And then last but not least, we're going to look at gold. Okay, so gold, you can see, was in a falling wedge pattern. That's this top trend line here that has now been broken. Okay, and then we've got the next trend line here, which we've seen a break and close above also. Now, right now we do have a short-term 6-month outlook on gold, which is negative from the commercials. They're heavily short right now on a 6-month look back. The Commitment of Traders report tells us that the commercial traders are the most excessive net position short looking back 6 months. So I wouldn't be surprised to see a small correction on gold before we have our continued upside. So any sort of retracement back down to, let's say, 1200, 1185, anywhere around that area, we'll be looking to get long gold, and we'll be looking to run that up. Minimum targets of 1300, but where could gold go this year? Who knows? Whenever there's uncertainty in the market, you're going to see gold strengthen, and as long as there's negative interest rates in the market, I think you might see money flow into gold as well. Okay, so from Phoenix Blue, that's the morning update. Should you have any questions, please drop us an email to info@phoenixblue. If you are watching this on YouTube, or you've got any other traders that you know might benefit from this, please guide them to our YouTube channel. And if you're not yet subscribing, hit subscribe and like, and then you'll get the automatic update sent to you via email as soon as the video is uploaded. Right, well, thank you for listening, guys, and we'll see you tomorrow morning. Bye-bye.